Hello and welcome to this comprehensive guide on how to secure high-limit business credit cards in 2026, even if you are just starting a brand new business. The financial landscape has changed significantly over the last few years, and the strategies that worked in 2024 or 2025 are not necessarily the ones that will unlock $50,000 or $100,000 limits for you today. In this video, we are going to break down the exact step-by-step blueprint you need to follow to build a credit profile that makes banks eager to lend to you. We are going to cover everything from the fundamental structuring of your entity to the specific order in which you should apply for cards to maximize your approvals and minimize hard inquiries. Let us start with the absolute foundation, because this is where 90% of new entrepreneurs fail. You cannot walk into a bank and demand a high-limit card if your business looks like a hobby on paper. The first thing you need is a legitimate business entity. This means you must have a registered LLC or corporation in your state. Sole proprietorships are generally not going to get the highest limits because they are too closely tied to your personal identity, and banks view them as higher risk. Once you have your LLC, you need your employer identification number or EIN from the IRS. Think of this number as the social security number for your business. It is what you will use to build credit history separate from your personal life. The next step in the foundation phase is your contact information. You cannot use your home address or a post office box if you want to be taken seriously by premium lenders. You need a physical business address. If you do not have an office, you should look into a virtual business address service that provides a real street address, not a PO box. This is a major data point that underwriting computers check automatically. Similarly, you need a dedicated business phone number listed in the National 411 directory. If a bank cannot verify your business exists by looking it up in public databases, you will get an automatic denial or a very low limit. You also need a professional website and a professional email address that matches your domain name. Using a generic email provider screams that you are a novice, and banks are hesitant to lend large sums to novices. Now that your business looks legitimate on paper, we need to talk about industry codes. When you apply for credit, you will be asked for your NAICS code, which tells the bank what industry you operate in. Some industries are considered high risk, such as trucking, real estate investing, or adult entertainment. If you categorize yourself in a high-risk code, you are statistically less likely to get approved for high limits. You want to choose a code that accurately describes your business but falls into a lower-risk category like business, consulting, or marketing or administrative support, if that applies to what you do. This small detail can be the difference between a decline and a $20,000 approval. We are now moving into the credit building phase, which is often called the tier system. You cannot jump straight to an American Express Platinum card with no history. You need to start with Tier 1 vendors. These are companies that will extend you net 30 terms without a personal credit check. Net 30 means you buy goods now and pay for them in 30 days. Great examples of these vendors are Yuling and Granger and Quill. You need to open accounts with at least 3 to 5 of these vendors. You should purchase small items that your business actually needs, like office supplies or packing materials. The secret here is to pay the invoice immediately. Do not wait for the 30th day. Pay it within a few days of receiving the invoice so that they report your payment behavior to the business credit bureaus quickly. Speaking of bureaus, you need to know who is keeping score. In the personal world, you have TransUnion and Equifax and Experian. In the business world, the big player is Dun & Bradstreet. You need to get a DUNS number, which is free and is essentially your file number with them. As you pay your Tier 1 vendors, they will report your positive payment history to Dun & Bradstreet. This generates your Paydex score. A Paydex score ranges from 0 to 100. You want a score of 8 or above, which essentially means you pay your bills on time. It usually takes about 3 months of cycling through these net 30 accounts to generate a solid Paydex score. Once you have a Paydex score of 8, you are ready to graduate to Tier 2. These are store credit cards that revolve. Unlike net 30 accounts, where you must pay in full, these are actual credit cards, but they can only be used at specific stores. Examples include cards from major office, supply staples, or hardware stores, or fuel cards for gas stations. You should apply for a few of these. Since you now have a credit file with Dun & Bradstreet, these issuers can see that you are a reliable borrower. Use these cards for normal expenses and pay them off in full every month. This thickens your credit file and shows other lenders that you can handle revolving debt responsibly. Now we enter the phase that everyone wants to reach, which is Tier 3 and beyond, involving major cash flow credit cards and bank cards. In 2026, we are seeing a massive shift toward fintech banks and cash flow-based lending. Companies like Bricks and Ramp and Divi are changing the game. These companies often do not require a personal guarantee, and they do not rely heavily on your personal credit score. Instead, they want to link to your business bank account and see your cash flow. This is why having a robust business checking account is vital. You should be depositing all your revenue into this account. The more average daily balance you can show, the higher your limit will be with these fintech cards. These cards are excellent for scaling because as your revenue grows, your credit limit grows automatically. However, the holy grail of high-limit business credit cards usually comes from the big traditional banks like Chase and American Express and Bank of America. To get approved for these with high limits, you usually need good personal credit in addition to your business credit. This is where the concept of the personal guarantee comes in. A personal guarantee means that if your business fails to pay the debt, you are personally responsible for it. While we all want to avoid this, providing a personal guarantee is often the only way to get those massive $50,000 starting limits when your business is under 2 years old. For these major bank cards, you need to be strategic about your personal credit profile. You generally need a personal credit score over 700. You also need to keep your personal credit utilization low. If your personal cards are maxed out, banks will see you as high risk even if your business is doing well. In 2026, banks are using AI-driven underwriting models that look at the relationship you have with them. It is highly recommended to open a business checking account with the bank you want a credit card from. If you want a Chase Inc. card, open a Chase business checking account 3 months before you apply. Put some money in there. Let them see you are a real customer. This internal data helps you bypass some of the stricter generic underwriting rules. Let us talk about the specific cards you should target for high limits in 2026.